what cues are you watching out for come TCS's numbers?
So clearly, Anisha, I think the expectation that the street has is 1% growth, 1.2% growth in terms of constant currency, around 1.4, 1.5% growth in terms of dollar revenues sequentially for TCS. Obviously, the order wins from BSNL is going to be a significant one, and therefore, I think the revenue contribution from this one over the next few quarters might be significantly contributing to the overall revenue pie. I think the growth prospects should be reasonably placed, and therefore I think the EBIT margin should hold up about the 25% mark, which the street probably believes in. Now, coming to the commentary, I think the commentary will be looking forward to in terms of more avenues, in terms of cloud, in terms of AI, and therefore I think the expectations in terms of TCVs holding up over the next few quarters, albeit I think if you leave aside a quarter or two, where I think still decision making is getting deferred by a couple of quarters, I think the second half should show significant amount of recovery, and therefore I think all these elements put together would probably mean that if commentary stays very positive, and as our take is that management commentary should remain positive for TCS as well. Second half recovery can be excellent for TCS as well. So I think generally, I think how they're looking at revenue trends, what is the deal pipeline, utilization levels, attrition, all those aspects will be taken into fold. It might be a little bit sticky this quarter and the next, but my take is that the second half recovery can be a good one for TCS. So let's wait for numbers, but anybody holding on to stock should hold on.
Okay, that's the take coming in on TCS. But Ani, you tell us, what's your poll penciling in for TCS today?
Well, the expectation from the overall sector is weak, so not much. But yes, amongst the peers, this might stand out as a better earning because we're expecting growth to be 1.5 to 2%. That's because the BSNL deal will kick in. The furloughs which are impacting the performance in Q3 won't be here this time around. So we're expecting a better number. Margins pretty much stable around the 25.2% mark. And the profitability will be higher, especially because of course, the revenue growth, the operating leverage kicking in. But also last quarter, there was a one-time provision which will not be there. Deal win momentum is also expected to be quite strong. Same $9 billion range, because remember there was that $2.5 billion Viva deal that had happened, so that will support the sentiment. But again, the important thing to watch out for is the management commentary about FY25. Will it be high single digit growth or mid single digit growth? That's important to know, because double digit nobody is penciling in right now. And the hiring outlook, demand outlook, those are the big things to watch out for. Valuation wise, the stock is not cheap by any metric. It's sitting at what, 28 times forward earnings, so it's not really cheap. But I think let's see what the company delivers, because that will set the tone for the rest of the IT pack as well.
If you like this video, then like, share and subscribe to ET Now.